Okay, Bismillah ar-Rahman ar-Rahim, wassalatu wassalamu ala ashrafil mursaleen. As the Sheikh mentioned, I'm Razaullah, I'm CEO and founder of Primary Finance. Also talking today will be Sheikh Salman, one of my partners in the business. We've got Umar around here somewhere. Umar, where are you? Umar, put your hand up. Umar is our Chief Technology Officer and also one of the partners in the business. And then we've also got Abdul Aziz, Amin and Kainat dotted around as well. But we're going to get started. Bismillah. Can everyone see the screen all right first? Okay, Jazakallah, let's get started. Okay, so a little bit about us. We're Primary Finance. What we do is we provide completely halal home financing. Now, this is a partnership-based home financing product, so it's very different to the Islamic mortgages that you've seen on the market before. And your first question is going to be, well, what makes you different? And I'm going to go through all that in the slides, inshallah, and you'll see we are very, very different. So our product is built from the ground up on sharia principles, but we're not here to explain why our product is the greatest. We are here to explain what the different products are on the market. We are not a mortgage. That's the first thing to understand about our product. With a mortgage, the bank lends you money. A mortgage is a debt-based instrument. And the key distinguishing factor is with a mortgage, if your property is destroyed, Allah protect all of us, you still may owe the bank hundreds of thousands of pounds. Whereas with a partnership, even if that happens, you don't owe us anything because we're partners in the business. Okay, so we're also going to take you through some of the sharia and fiqh principles, as I mentioned, and Sheikh Salman's going to cover that bit. And then we're going to take you through the range of products on the market, a quick comparison between them, followed by Q&A. And we're going to get straight into it because I know Isha's around the corner, and we're probably going to have to break for Isha. So we're here to really raise awareness and educate first and foremost. I'm sure many of you in the room are, top of your field. I'm sure we've got doctors in the room. I'm sure we've got dentists. I'm sure we've got lawyers. I'm sure we've got teachers. I'm sure we've got, very well-educated people. But I'm sure many of you, when you think about Islamic finance, think, well, I don't really know how Islamic finance works, and I don't really know what makes a difference. And that's what we're here to discuss today, inshallah. So the problems we set out to fix. Financial exclusion is a key one. Particularly amongst the Muslim community, we are, as a community, financially excluded because when it comes to buying a home or getting finance of any sort, there are only a very limited range of products on the market and an even fewer range of products that we can feel comfortable with. And we need to understand those products to actually feel comfortable with them. And as a result, we get marginalized and excluded as a community. And one of our key visions is to help increase financial inclusion for excluded communities, not just Muslims, by the way, but for any financially excluded communities. For example, communities who don't want riba, communities who don't want to go to a big bank. We fear that there's an epidemic coming amongst the Muslim community where Muslims are staying away from home buying. And I've spoken to a couple of people today who have said that they've been renting for years because they don't want to buy a home, because they don't feel comfortable with any of the products on the market today. And so what we're going to find is an epidemic where Muslims stop buying homes and become less and less wealthy relative to other minorities and other people. And that's going to be very detrimental to our people. So we need to do something about that. Riba is obviously the key problem for Muslims. We don't want to consume riba. We don't want anything to do with riba because we know how haram riba is. Allah likens riba to fornicating with your own mother or to raising a sword and taking up arms against Allah and His Rasul sallallahu alaihi wasallam. So we know the seriousness of riba, and that's something we all want to avoid. So how can we avoid that? And then the other problem is the rent trap. So as I mentioned, Muslims are staying away from buying homes and renting. Now, when you rent, what you're doing is making your landlord richer, but you're not gaining anything in the property. Now, alhamdulillah, you're paying for a service and that's valuable. You have a home to live in, but ultimately, many of us want to actually ultimately be able to own that home and live in it. And what we don't want is to be trapped renting for the rest of our lives, spending all of our income on rent and not having anything left over to actually own a home ourselves. So these are some of the problems that we're trying to fix. Sheikh Salman is going to take you through some of the Sharia principles, inshallah, and then I'm going to take you through the range of products on the market.
Brief background to myself. I grew up just on the other side of the river in Stepney, and I got a law degree from the London School of Economics. After graduating in law, I decided I wanted to avoid the rat race of the city. And I was very, very keen to become more like my father, who's a Maulana, mashallah, who's a scholar of Sharia. So I went off to Damascus to study the Islamic sciences. And I can remember back in the late 1990s saying to one of my teachers, I'd like to become an Islamic finance lawyer. And I didn't really even understand what that meant. And he said to me, well, he didn't say to me, can you become rich? He didn't say to me, can you get a big reputation? Or will you become an important person? He didn't say any of these things to me. He said, هل تستطيع أن تخدم الناس? Can you serve people with this? And I thought to myself, well, that's a really important question. So what I'd like to say is everything I feel I've done in my quote-unquote career, I feel has culminated to what we're doing now in terms of providing a service to the Muslim community and building financial institutions and financial products that serve the needs of the Muslim community and are based on the sharia without compromise. And this is really important to us because I'm a firm believer that Allah does not need me to serve his ummah or serve the ummah of the Prophet Muhammad ﷺ, or serve his deen by breaking his sharia. That is not the mandate Allah has given us. Allah has told us to follow his sharia and Allah will take care of the rest. So when we set out, we were very, very keen to ensure that everything we do is based not just quote-unquote sharia compliant, because there's a sort of buzzword out in the Islamic finance industry of sharia compliant, which means that they've ticked certain boxes, but if effectively what happens, and I know this as a lawyer myself, a car mechanic knows the inside workings of a car. The car mechanic can pop the bonnet and tell you what's wrong with the car. I drive the car, but I don't know how the car works or what's wrong with it. A mechanic can tell you. A lawyer is a bit like a mechanic for financial products. A lawyer can tell you by reading the contracts what's actually happening underneath the bonnet of the contract. And working in an English law firm here in London and also in Dubai, I worked in one of the top 10 law firms in the city of London, and I only did Islamic finance. And I can tell you that the bankers would come to us and they would say to us, this is an interest-based product. This is a home finance, or this is a mortgage. How can we do the same thing but make it Sharia compliant? That was the mandate the bankers would come to us with. And we had to tinker around with the contract and create the same economic outcome as a traditional mortgage, but try to give it the label or the structure of Sharia compliance. We did not want to do that because I don't think that Allah gave us the Sharia for us to find ways around it. I don't think that was the intention of our Creator. So we wanted to build from the ground up based on Sharia principles so that we are following the spirit and the letter of the Sharia. We are doing what Allah intended us to do by following the Sharia. This is very, very important. Now, to kick off, many of you know that we have Islamic banks in this country. Now, we're not here to put anybody down. The objective here is to arm you with the knowledge and the information so that you know what's out there and you can make an informed decision and refer to your own scholars who will advise you on what is right for you. All we can do is give you the information. So we're not only going to talk about our product, Brother Raza later is going to compare our product against mortgages and Islamic banks and other part rent schemes. What I want to do is explain how the principles of Sharia operate in the home finance space. To do that, I'm going to start off with a very short story. And I'm going to use a car as an example because a car is easier to visualize. Suppose you and I decide to buy a car and we say, right, we're going to buy this car in partnership. Suppose it's £10,000. I paid £5,000. You pay £5,000. We decide that we're going to be 50-50 partners in this car. So far, so good? Makes sense? Yeah? And we agree that we're going to then rent that car out and try to earn an income from that car. So it's going to be an investment for both of us. And so we go out looking for a car, we find a car, and then you say to me, you know, Salman, actually I need a car. So why don't I rent the car from the partnership? Does that make sense? So I say, fine, that's better, because I trust you, I know you're not going to trash the car. I actually prefer you to rent the car. So we go out, we buy the car together. So the car is 50-50, jointly owned by you and me. And you rent the car off of me. Okay? Now, of course, because you own half of it, you'll only pay rent on my half. Make sense? So if the rent is £500, each month you'll only pay me £250. Make sense? Okay, now I come up with a clever idea. I'm not really interested in taking the risk in the car, right? I just want to get a return for my money. That £5,000 I've put into the contract, I want to get a return for it. And I don't want to take a risk in the car. That's my deep down intention. It's not a good intention, by the way. I'm just telling you what it's in the story. So I say to you, you know what? Why don't you buy my share off me? Buy it, but you can pay in installments. Because if you had the money now, you would have just bought the car yourself, right? Yeah? So you don't have the £5,000. Say, right, you can pay the £5,000 over the course of a year. So buy it off me. So you buy it off me now, so the risk passes on to you. Does that make sense? You're now the owner of that car. Even if you're not the owner on the logbook, in contract, in trust, you're the owner of the car. Does that make sense? Yeah? So I've sold it to you. So in the contract, you've signed a clause which says, I buy the car off you for £5,000, exactly the amount of money I've put into the contract, for £5,000 payable in monthly installments over a year. Okay. At that point, so that's happened on day one. You've bought it off me, right? Do I have any more ownership of the car? Right. Can I now charge you rent on the car for the rest of the year? Is anybody here who thinks it could be justified, either on Earth or on Mars, for me to charge you rent on the share of the car that I've just sold to you? It's now yours. It's your risk. You owe me money. You owe me a money debt. You owe me £5,000 payable over the course of a year. You owe me a debt. Can I now charge you rent on my share of the car for the rest of the year? No. That's common sense, right? If I were to do that, it would be very strange. Even an alien landing from Mars would find that very strange, because I don't own that share of the car anymore. I cannot rent that to you. I've technically sold it to you. Everybody understand that? Okay? Now, if I were to try to sell you something I don't own, in Sharia, this is called bay'ul ma'doom, sale of something I don't have. The Prophet ﷺ said, "La tabi'u ma laysa 'indakum." Don't sell what you do not have. This hadith has many, many ramifications and explanations. One of them is this: to sell something again to you that I've already sold to you. I've sold you the car, then I'm now selling you the use of the car again. So I've sold you the same thing twice, right? Does that make sense? I've sold you the car, and I'm selling you the use of it, so that's selling you twice. That doesn't make any sense. Okay, so you've all agreed that doesn't make any sense. And actually, if you think about it, those of you who are smart, I can see some kids around here, good mathematicians, some boffins. I'm sure you've already worked out that if I were to charge you rent for the rest of the year, it wouldn't be rent on the car, would it? What would it be rent on? The money. Are you an accountant? No, but all right, you don't have to be an accountant or an actuary to work that one out. I'm actually charging you rent on the money that you owe me, not on the car. The car is now fully yours, right? And what do you call rent on money? Riba. That's it. You see? So now can you understand what lawyers do sitting in these glass offices? The bankers come to us and they say, how can we structure a mortgage but make it look like a co-ownership with a rental agreement? Actually, they don't say that. They say, how can you do the same thing but call it Sharia compliant, using Sharia contracts? And so the lawyers sit in the room and say, we could use a combination of a co-ownership, a sale, and a rental contract. You can see there's 3 separate contracts there. A co-ownership, a sale to you of my share, and then a rent, a lease to you of my share again. If you combine the sale and the lease together, you get the effect of what? Riba, right? This again violates another prohibition of the Sharia. See, the Sharia is not so flea-bitten that our Creator did not create rules to prevent this. See, firstly, the Prophet ﷺ prohibited bay'ul ma'doom. This contract has already violated that. Secondly, he prohibited the combination of 2 sale contracts in one. Yeah? He said, لا تبيعوا بيع أو نهى عن بيعتين في بيعة. He forbade 2 sale contracts in one. So here you've got a sale contract, sale of the share of the car, second sale contract. A lease is a type of sale because you're selling the usage of the car. In Arabic, it's a type of bay'. So we say that's a second sale contract. So there's a violation of that. So this is just how bankers and lawyers have worked together in the field of Islamic banking to create Islamic banking contracts that appear to be Sharia compliant and get sign-off and are labeled as Sharia compliant. But if you really think about it, if you pop the bonnet and you look underneath, you'll see that actually it does violate certain principles of Sharia that have been ignored in the banking sector. So that's a brief background. Now, all you have to do now is think, instead of the car, think of a house. The same thing. So if you were to go to an Islamic bank, the Islamic bank contract will say that you and the bank enter into a co-ownership. You might put down 10% or 20%. The bank puts down 80% or 90%. And then in the contract, it says immediately that you must buy the bank's share off the bank immediately on day one. So the day the co-ownership begins, that day it ends. There actually is no co-ownership. You see, in the same contract, the co-ownership begins and ends because the bank has sold its share to you. What you now owe the bank is a money debt payable over 20 or 30 years. And each month, the bank will charge you rent on the debt. You're smart enough to know it can't be rent on the house. It's rent on the debt each month until you've bought off the bank's share. The bank has protected its capital just like a traditional bank because you now owe the bank that money, just like a traditional mortgage. The bank's capital amount is protected. The bank makes its money out of what? Out of the rental rate. And lo and behold, in Islamic banking, almost invariably, that rental rate is pegged to what? It's benchmarked to what? To the Bank of England interest rate. Why? Because in reality, that's what it's trying to do. It's trying to charge you a rent on money based on the interest rate. Okay? Now, that's what we did not want to do. And I hope that really explains what's happening in the Islamic banking industry. I'm not here to say it's right or wrong. I'm not moralizing here. I'm trying to give you a very simple explanation to you so that you can understand it and make your own informed decisions whether you think that is the right thing for you. Yes, so going back to the point of risk, that's really important. So as you can see, in lending contracts, the lender does not take risk in the activity or the asset being financed. Okay? So if you're buying a house, the bank lends you money. Whose risk is the house? If the house were to fall into the sea, would it be the bank's risk or your risk? It would be your risk. The easy way to understand that is, if the house were to be destroyed or something were to happen to it, do you still owe the bank the same amount of money? Yes. So the bank doesn't take risk in the house. Okay? But the bank gets some income from the money they've lent you on the basis of the mere fact that they've given you the money. So it's money on money without taking risk in the asset. A key principle of Sharia is that what entitles me or anybody to a return on an investment or on money. And this goes back to the hadith of the Prophet ﷺ in which he said, Al-kharaju bid-daman. Al-kharaju bid-daman, which means that the return you get from any activity is connected to the fact that you took liability for a loss. See, when you and I were 50-50 partners in that car, and that car were to get stolen, or something were to happen to it, whose loss would it be? Both of ours, right? So we're both shared in the risk in the car. And so if we were to rent that car out to another person, that now gives each of us the right to take half of the rental income from the car. Does that make sense? Yeah. So if I own a house, for example, I'm a landlord, and I have a tenant, what gives me the right to charge rent to the tenant? What gives me the right is that I take risk in the house. And this is a non-negotiable principle of the Sharia. So if the landlord were to say, right, okay, I've rented you this house, and the wind came and blew the roof off of the house. Okay, you as the tenant, can you go to the landlord and say, can you please fix the roof because the house is uninhabitable? I'm not going to pay you rent until you fix the roof. Would you be entitled to do that? Yes, because it's the landlord's responsibility to give you a habitable house. And that's his risk. If it's not habitable, he has to make it habitable. Otherwise, he's not entitled to charge you rent. This is a non-negotiable principle of the Sharia. If the landlord in the rental contract were to pass that liability onto you and say, if the roof caves in, you have to fix it, would that be Sharia compliant? No. Okay. So again, this is a non-negotiable principle. So what do Islamic banks do? In their contracts, in their mortgage contracts, they pass that risk, that the major maintenance risk of the house, they pass that on to you, because ultimately they're not interested in the risk in the house. They just want to charge rent on their money. Okay. So we have created a product where we will go into a partnership with our customers, and we take risk on our share of the property. This is very, very important. There is no way that we can opt out of that. And alhamdulillah, our home finance product has been signed off by Sheikh Haytham Al-Haddad. Many of you may know him from the Islamic Council of Europe. So not only have I ensured that it's all right under the bonnet, Sheikh Haytham has also popped the bonnet and looked underneath and also given us an external certification. So Jazakumullah khairan. I hope that's been educational and explained the core principles of the Sharia when it comes to finance, and in particular financing homes. I'm going to hand over to my colleague, Brother Raza, who's going to now take you through the various options available to you at the moment. Assalamu alaikum.
So Sheikh has gone through the Sharia principles. I'm now going to explain the range of products on the market, the ins and outs of their workings, the pros and cons, and the things you need to be thinking about when considering different types of products for buying a home. And then I'm going to get onto savings as well, inshallah. The way a traditional mortgage works is the bank lends you a sum of money, right? You take that sum of money and you go and buy a home. Now you become the owner of the property immediately. So you take all the risk in the home, as Sheikh Salman said, because you are now the owner of the home. But you also now owe a debt to the bank for the next 20 years, 30 years, whatever it may be. You must now pay the bank interest plus capital every month without fail. And by that set period of time, let's call it 30 years, you must have paid the bank back all of the money that it loaned you with interest. Okay? So this is one extreme of home ownership, where you are the sole owner of the home. You take all the risk in the home, but you have borrowed money in order to achieve that, and you now have to pay that money back with interest. Now, as I'm sure all of you are aware, that interest is riba, and that is haram for us as Muslims to take on. But what are some of the pros and cons of a traditional mortgage? And there are some pros. So the pros are that there's lots of providers in the market. It's a very well-established product. It's fully regulated by the Financial Conduct Authority, and in many cases the Prudential Regulatory Authority. So it's a very established, very heavily regulated industry. But what are the cons? Well, as I've mentioned, it's debt-based. Because it's debt-based, the money that you pay on a debt is riba. And for us, that makes it a deal breaker. For Muslims, we cannot accept being involved in riba, and I've explained some of the hadith around that already. There's also very, very little flexibility when you take on a mortgage. And to explain that point, let's say your bank says to you, right, to pay us back within the next 30 years, you must pay us £1,000 per month, interest plus capital repayment. You must pay the bank that £1,000 a month, every single month, without fail, on the nose. If you are short in any month, let's say your car broke down and you had to pay a mechanic, or your boiler broke down and you had to pay to get the boiler repaired, and you're cash strapped in any given month, so you can't quite make the £1,000 payment, the bank doesn't care. You have to pay the £1,000. So what the bank will do is they might give you 2 months payment holiday. In that 2 months, they'll charge you interest on the shortfall. So it's riba on riba, compounding riba, making it even worse. And if you don't make up the difference in that 2 month period plus interest, then the bank is going to kick you out of your home, and you're going to end up on the street without a property to live in anymore. So that's how a conventional bank mortgage works. And they also charge you fees for early repayment. So even if you want to get out of riba, let's say you've taken on a mortgage and you now decide, okay, I want to get out of this. Let me just pay it off. I'll borrow money from my family or whatever, and I'll just pay it off to get out of riba. The bank will say, no, that's not good enough because we haven't made enough money from you yet. So if you want to pay us early, we're going to fine you for paying us early. This is the oppressive nature of riba. This is the oppressive nature of these debt-based mortgages. And there are many countries in the world who are enslaved to debt in this way. There are countries who the West literally enslaves through riba, who have been paying back their national debt for decades. And all they've managed to pay off is interest, riba, and they still owe the same amount of money after decades of paying money back to the West. This is the oppressive nature of debt and riba. And this is why Allah has made riba so haram for us. Current providers in the market, you all know who they are: HSBC, Barclays, Halifax, the big banks, the big building societies, you know who they are. Ownership profile, as I've mentioned, you are the 100% owner from day one. So this is one extreme of property ownership. You take all the ownership from day one. Who can tell me what the opposite extreme is of home ownership? Sheikh Salman talked a little bit about it. So in this situation, you own 100% of the property. What's the opposite situation? You don't own any of the property. So the opposite extreme of home ownership is renting from a landlord. And as Sheikh Salman mentioned, the difference is who takes the risk. When you are the 100% owner, you take all the risk. If the property is destroyed, blown into the sea by a hurricane, if the insurance fails or whatever, bank doesn't care. You still owe that money to the bank. So in the worst case scenario, Allah protect every single one of us. In the worst case scenario, your property could be destroyed, you could end up homeless, and you still owe hundreds of thousands of pounds to the bank because you are the one taking all the risk with a mortgage, right? And this is what we need to realize. Mortgages are debt-based. Debt is the cheapest form of finance you can get. Why? Because the bank takes no risk. The bank shovels all of the risk onto you. So they don't need to charge for that risk because you're taking all the risk. That's why mortgages are cheap, right? So this is one extreme. Now consider the opposite extreme, as Sheikh Salman mentioned, renting a property. So when you're renting a property, you own 0% of the property. The landlord owns 100%. If the property is destroyed and swept into the sea, whose problem is it? Is it yours or the landlord's? Landlord's problem, because he is the owner of the property. He's the one taking the risk. You can wipe your hands clean and find another property to rent or move on. You don't suffer the loss as a result of that. This is very important to understand, and you'll see why in just a minute. Now let's consider Islamic bank mortgages. So the way an Islamic bank mortgage works is structured slightly different to a conventional bank mortgage. With an Islamic bank mortgage, Sheikh Salman's covered this, but I'm going to cover it again just to make sure we're all on the same page. With an Islamic bank mortgage, the bank says, right, rather than us lending you money and you going and buying the property, what we're going to do is we're going to buy the property for you, and you put in, let's say, 20% towards the property, okay? And we'll say you're part owner and we're part owner, and you rent our share from us, right? So the bank says, we own the property, you rent our share from us based on how much we've contributed to the property. And now you must buy our share from us over a set period of time. There's two ways of looking at it. One way is, as Sheikh Salman explained, one way is saying, right, we're going to sell you the property today and you pay us back over a set period of time, right? So it's an advanced sale. So we sell it to you today and you pay for that sale over the next 30 years. That's one way of looking at it. And if you look at it that way, as Sheikh Salman mentioned, then the bank is no longer the owner of the property. You are the owner of the property. So they shouldn't be charging you rent on something they don't own. That's one way of looking at it. The other way of looking at it is, as the bank explains it, they own the property and you are buying some of their share from them every single month over the next 30 years. And you must pay rent to them every single month on the share you don't own. And you must buy their share of the property from them each and every month over the next 30 years. And you must buy it for a pre-agreed price. Now think about this. If I said to you, I own this laptop, it's worth £500 today, okay? If I said to you, first of all, if I said to you, you must buy my laptop off of me for £500, what will you say? You might say, I've got no money, or you might say, well, I don't want your laptop. Or you might say, fine, I want the laptop. But you might say, you know, who are you to force me to buy your laptop? I'll tell you if I want to buy it. I'll offer to you if I want to buy it. Now imagine I've got 100 laptops, okay? And I say, you must buy one of my laptops off of me every single month for the next 30 years. And if you don't buy one of my laptops in any given month, you are a very bad person and I'm going to punish you for it. It's absurd, right? I can't force you to buy anything from me. If you want to buy it, you'll buy it. You'll offer to buy it. If you don't want to buy it. But this is the other way of looking at it. So the bank says, you must buy a share of our property off of us every single month for the next 30 years. And now consider this. If I say to you, my laptop is worth £500 today, or actually let's take another example. My car. Sheikh Salman mentioned a car. My car is worth £10,000 today. You must buy it off of me in 10 years' time for £10,000, right? In 10 years' time, the car, is it likely to be worth £10,000? No. Is it possible it's gone down in value? Quite likely. Is it possible it's gone up in value? It could have, right? Now, consider both of those scenarios and you'll see why this is a haram contract. Imagine in 10 years' time, the car has gone down in value to £5,000, but you now must purchase it from me for £10,000. Is that fair on you? No, you're being forced to buy something for double the price. You should be able to say, actually, that's, it's not worth 10,000, so I don't want to buy it for 10,000. Consider the opposite scenario. Let's say the car has doubled in value to £20,000, but our agreement is that you're going to buy it from me for £10,000. Is that fair on me? That I must now sell it to you for £10,000 at half the value? No. So whichever way the value of the car moves, one of us loses out. And this is called a forward contract. And this is why forward contracts are forbidden in Islam, because they are not fair. One person must lose out, no matter what, right? So there's two ways of looking at this contract. Whichever way you look at it is problematic. So this is how an Islamic bank mortgage works. In terms of the pros and cons, we have to be fair, they have been approved by Sharia scholars. And we are not here to say those scholars are right or wrong. We are not here to say these Islamic bank mortgages are good or bad. We're just here to arm you with the understanding of how they work, give you a peek under the bonnet, as Sheikh Salman put it, so you can make up your own mind, inshallah. So they have been approved by Sharia scholars, and we must give due respect to our Sharia scholars. That's important to state. They don't take late payment fees for themselves. So if you pay early or late, they will charge a late payment fee, but they'll donate it to charity. So it's slightly better than conventional mortgage in that respect. The conventional mortgage will take that fee as profit. And they are also regulated and well established, right? Islamic bank mortgages must also be regulated by the FCA, Financial Conduct Authority, and in many instances, the Prudential Regulatory Authority as well. So those are some of the pros of Islamic bank mortgages. On the other hand, they are ultimately debt-based products. And as we went through some of the issues with debt and being forced to pay money on a debt, this is something we have to be very wary of. There is no material risk sharing. Imagine the car that you and I bought together, brother, for £10,000. And this is again going back to the example Sheikh Salman said. If this brother and I own a car 50-50, right? And now the car is blown up in an accident, no longer exists, completely destroyed. Can I now go to the brother and say, you must buy my 50% share of the car from me? What car? There's no car. How can I force him to buy it from me? How can I force him to buy it in the first place, let alone if it doesn't exist anymore? So when you look under the bonnet of an Islamic bank mortgage, the contract will say, if anything happens to the property, you must immediately purchase our share of the property from us. So what the bank doesn't do is share in the risk of the property. And this is problematic when you're looking at a partnership-based contract. And finally, as Sheikh Salman alluded to, the rate that Islamic bank mortgages charge is again pegged to interest rates, pegged to the London interbank offered rate, the Bank of England central rate. So, you have to ask yourself, if something smells like fish and it tastes like fish and it looks like fish, but it's called a rose, is it a rose or is it a fish? And I'll let you make the decision for yourself, inshallah. But this is just arming you with the tools to understand, inshallah. Current providers on the market, Al Rayan Bank is the biggest Islamic bank in the UK. They've pulled out of the retail mortgage market now, unfortunately. Gatehouse Bank is the next largest player in the market. And then there's some very small players like UBL and Ahli United Bank. And the ownership profile, again, depending on which way you look at the contract, if you interpret it the way Sheikh Salman interpreted it, then you are the owner from day one, but you're now being forced to pay rent on the bank's share, which they've already sold to you. Or if you look at it through the other interpretation, through the other lens I mentioned, then the way the bank does it on paper, the bank is the 100% owner throughout the contract, and they transfer 100% of it to you at the end of the contract. So you are the 0% owner right until the end, and then you suddenly become the full owner. So that's how the ownership profile with an Islamic bank mortgage works. Okay, now on to shared ownership. So shared ownership is a relatively new concept in the field of home buying. And the way it works is through the notion of partnership, right? So you've got one extreme, as I mentioned, which is a mortgage, where you take full ownership from day one and all the risk. The other extreme is renting, where you take none of the ownership and none of the risk. Shared ownership is in the middle of the two. You take some of the ownership and that portion of the risk, and your funding partner takes the remainder of the ownership and that portion of the risk. That's how a shared ownership model works. And you get providers, you get private businesses offering these, and you also get some local authorities offering these as well. So you purchase the property together with the financier. let's say it's £100,000 property and you've put in 20%, £20,000, and the financier has put in 80%, £80,000. On the land registry title deed, you will be 20% owner and they will be 80% owner. So different to the Islamic bank, where on the title deed, they are the 100% owner all the way through. Okay. So you will be part owner. And as you buy more shares from them, then they will update that on the title register as well. That's how a shared ownership model works. Now, typically with shared ownership models, there is no compulsion on you to buy out the financier's share. Okay, so this is good. All you have to do is rent their share, and you can think of it like renting a property from any other landlord, except rather than renting the whole property, because you own some of it, you're just renting the bit you don't own. So this is fine. There's nothing problematic about this at all. There won't typically, with a shared ownership contract, there won't typically be anything in the contract around you purchasing equity, okay? So your contract will be just to rent their share, and whenever you want to, you go and offer to buy some of their share off of them. And most shared ownership providers will say, right, you can offer twice a year or once a year to buy some of our share from us, and the rest of the year you just rent, right? You rent the share that you don't own. Now, there are a few things to consider here. From a sharia perspective, this contract is not problematic at all. This is a very halal contract, because the key difference between this and an Islamic bank mortgage is that there is no compulsion on you to buy their share. So there are no two contracts in one. The only contract is the lease. You must pay your rent every single month. And now you can offer whenever you want to buy some of their share from them. That's no problem. And the way to conceptualize that is, imagine renting a property from your landlord. Your only obligation is to pay rent, completely halal contract. If you approach your landlord and say, Mr. Landlord, I would like to buy your property from you, the landlord can say yes or no. And if he says yes, you agree a price and you buy it from him. Alhamdulillah, completely halal. This is not two contracts in one. It is two contracts, but it is not two contracts in one, because one of the contracts has been agreed up front, your rental agreement. The second contract is on the spot, right? The two contracts are not contingent on each other. They're not linked to each other. They're completely independent of each other. That's the fundamental difference. And so I don't think anyone here will argue that if you offer to buy your home from your landlord, there is anything haram or wrong with that. That is definitely two contracts, because you're still renting from them and now you're offering to buy. But the key fundamental principle is they are independent, unlinked. When you link those two, the sale and the lease agreement, then what you end up doing is replicating riba. And that's why you can't have two contracts in one. So the pros of shared ownership providers are that they are debt-free. You do not owe that provider anything apart from your rent. You're paying your rent, but you do not have any obligation to buy their share off of them. So just like me and this brother owning the car together, I need to ask your name, brother, because I keep... Yasir, Assalamu alaikum, Yasir. So just like me and Yasir owning a car together, I haven't loaned Yasir any money, he hasn't loaned me any money. We are both partners in the car. Yasir can offer to buy my share from me anytime, no problem at all, right? But he is not indebted to me in any way, because I haven't loaned him money for the car. I have purchased the car with him, right? So there is no debt obligation here, unlike with the mortgage structures. The risk is shared. With a shared ownership provider, you take your risk in your share of the property, the shared ownership provider takes their risk in their share of the property. So if the property is destroyed, you take your share of the loss, they take their share of the loss. This is very halal. This is how a partnership should work. There are typically less strict entry requirements than a bank. So typically, if let's say you wanted a mortgage, typically if you can't get a mortgage with a bank, that doesn't necessarily mean you can't get a shared ownership product. So shared ownership providers tend to be more willing to actually support people who are a bit more financially excluded. So from a Sharia perspective, these are wonderful, right? From a Sharia perspective, can't fault them. But there's a difference between being Sharia compliant and being practical. And there are just some practical issues to be aware of. With typical shared ownership providers, one thing you have to look out for in the contract is what happens upon a default. Let's say you can't pay your rent in any month. What happens? And one thing you need to be very careful of, and I'm not going to name any names, but it's up to you to bear this in mind if you're considering a shared ownership structure. What you need to be very careful of is, with many shared ownership structures, there will be a clause saying if you miss one rental payment, we can take the entire property off of you. And you lose even the share that you put money in towards. Very, very harsh, very, very penal. and actually probably arguably not even Sharia compliant, I would say, because it's so harsh and so extreme. But Sheikh Salman can comment better than me. So this is one thing you must look out for if you're considering a shared ownership finance arrangement. The terms and conditions can be very, very penal. They can also be very, very expensive, prohibitively expensive. Because what the shared ownership provider will do is charge you rent on their share at full market rent. Okay? And then when you're offering to buy their share from them, and bear in mind, many shared ownership providers will restrict how often you can buy their share from them. Maybe it's only once a year, maybe it's only twice a year, something like that. Okay? But what most shared ownership providers do is once a year or maybe twice a year or maybe even more frequently, they will revalue the property. And what do property values in this country tend to do year on year? Go up. Can anyone tell me roughly how much they tend to go up by year on year? On average? 10%. 5 to 10% across the board year on year. Can anybody tell me how much salaries tend to go up by year on year? 1 or 2% if you're lucky. If you're an NHS nurse, no chance, right? 1 or 2% if you're lucky. So if the value of your home, the buyout share, the price you have to pay to buy out the rest of your share is going up by 5 to 10% per year, but your income is only going up by 1 to 2% per year, is it realistic you're ever going to be able to afford to buy that property? No. It's a carrot on a stick, right? It's a dream that you're always clutching towards and never going to be able to afford. And this is one thing to be very wary of with shared ownership providers. And what you'll find is most shared ownership providers, as I've said, they position themselves mainly for people who can't get a mortgage, and they mainly position themselves not as a long-term purchasing solution, but as a stepping stone onto a mortgage, right? The main reason shared ownership providers came about is with good intentions, right? I'm not knocking them, but they came about with good intentions to help people who can't get a mortgage, so that you have a stepping stone, you increase your credit record, you increase your equity, and now you can go and get a mortgage, right? That is how shared ownership providers typically position themselves, okay? And then I've mentioned, they increase the value and charge you full market rent. Now, for those of you who are renting at the moment, when you're paying your rent to your landlord each month, just imagine, have you got much money left over to actually then go and pay extra to buy equity as well in a property? It's very hard to actually have any extra left over. And if you do have any extra left over, the amount you're paying for that equity is going up and up and up. So it's very prohibitively expensive over the long run. So it can work. As I say, from a Sharia perspective, it works, but you just need to be very aware of some of the other practical issues around shared ownership. Okay? Some of the providers on the market are the likes of Your Home and Way Home. I'm sure many of you have heard of them. Again, specifically with these guys, and don't quote me on this because I don't work for them, so this is based on my understanding, and you should validate this understanding yourself. But typically, let's take Way Home, who are they're a very large player in the market. So what Way Home does is they say, again, from my understanding, I have to caveat this, so you must validate this yourself. But from my understanding, what they say is you cannot buy more than 5% of their share from them in any given year, right? So they limit how quickly you can buy equity, which means that even if you've got money spare and you want to buy out equity and reduce your rent, you're limited by how much you can. And then they say you can't go more than 40%. So once you get to 40%, they say you have to either buy out the remaining 60% from us all at once, or you have to remortgage, right? So it makes it very, very hard to actually get to full home ownership. First of all, because I mentioned property prices going up and up and up. And second of all, once you get to 40%, what do you do? How do you get that remaining 60%? As I mentioned, Way Home actually say themselves very clearly, if you can get a mortgage, this is not the right product for you. So they themselves position themselves for people who can't get a mortgage. And the idea is to build up your track record and then move on to a mortgage. Okay, so this is something to just be aware of. And it can be, it can be the right option. Okay, for example, they only require a 5% deposit or initial equity amount. They only require you to put in 5%. So, it can be a useful stepping stone if you've got a plan for how you're going to move on later on, but it's just something to be aware of. Ownership profile. If you put in 20% on day one, the contract you have with them is that your ownership stays at 20% for the entire duration. It's up to you off your own back to go to them and offer to buy extra shares whenever you want. Okay, they won't remind you. It's not in any of the calculations. It's for you to go and say to them periodically. So you have to remember, I don't know with Way Home how often you're allowed to buy a share from them, but let's say for argument's sake it's every quarter or whatever. You have to remember every quarter to go to them and say, okay, I've got a bit of money saved up, I'd like to buy your share from them. Okay. And the other thing is the rent, as I mentioned, is at market rent, and it increases by inflation plus a percentage every year. Now, who here can tell me what the rate of inflation is at the moment? Is it low or is it high? Very, very high. So that's, again, something to be very wary of. The rent is reviewed annually, and it moves by inflation plus a percentage. So that's something to be aware of. Okay, I'm going to very quickly cover our product as well, because we're also a home finance provider. So it, again, comes under the shared ownership bracket, okay? Part buy, part rent. So let's say you put in 20% and we put in 80%, okay? You are a 20% partner, we are an 80% partner. It's a debt-free contract, as I mentioned. We haven't loaned you any money. We have gone into partnership with you. You pay rent on our 80% share. That's your only obligation. And if you want to buy our share from us, you're very welcome to, but there's no obligation. So there's no debt. You don't have to buy our share if you don't want to. It's very flexible and very affordable. The reason being that you can choose from month to month, anytime you want. You can choose how much of our share you want to buy from us or not at all. Entirely up to you. And we enable that through our app, which I'm going to talk about in just a minute. So it's very flexible. And the reason it's affordable is because, unlike other shared ownership providers who charge you full market rent and revalue the property year on year, what we do is we charge you discounted rent. So we look at the rent for that property and we discount it, and I'll explain that in just a second. But also, when we're selling equity to you, when you're buying our share from us, we know if we revalued the property, you're never going to be able to afford it. So to enact our vision of increasing home ownership, particularly amongst Muslims, and increasing wealth, particularly amongst Muslims, we have taken the active decision that whenever you offer to buy a share from us, we're going to just offer it to you for whatever it cost us. So our business model is built around the rent. We make our money from the rental income, and as the capital appreciates in value, we don't charge you more for it. We just want to break even when we're selling the property to you. That's it. That's all we need. So that makes it very affordable. In terms of the rent, the way our rent works, pay attention here because this is very interesting and it's very unique. The way the rent works is, let's say it's a £100,000 property, and just to make the numbers really easy, you've put in 50% and we've put in 50%. So we're 50-50 owners. Let's say the base market rent for that property is £1,000 per month, okay? Now, because you've become a 50% partner, your rent is going to be £500 a month to us, okay? That's simple, right? Now, if you're just renting that property, you're just paying £500 a month rent to us, no problem at all. That's the fair rental price to pay for just renting that property. But we appreciate that you don't want to just rent the property for the rest of your life, and we don't want to trap you renting for the rest of your life. That's not our mission. We appreciate that for you to be able to afford to pay your rent and buy the shares in the property and ultimately fully own the property, there needs to be some give. And so what we do is we say, if you say to us, I want to fully own my home after 30 years, we'll say, okay, rather than paying £500 a month, and I'm completely making these figures up, so don't read into them, rather than paying us £500 per month, pay a little bit extra, £600 per month. Not a huge amount extra, a little amount extra, £600 per month. And whenever you do that, whenever you're sticking to your target, because we want to incentivize you to stick to your goal, and we want to help you achieve your goal of home ownership, whenever you're sticking to your monthly target, we're going to give you a discount on your rent, a further discount on your rent, right? And these discounts that we give can be, they vary by property, by location, they vary. They're typically at least 5%, but in some cases they can be as high as 50%. Okay, so they can be very substantial. So let's say it's 30% in this example. What that means is if you're just paying rent, you're paying £500. If you pay an extra £100, you pay £600 in that month. Rather than us charging you £500 rent, we're going to discount it by 30%, which means we're only going to charge you £350 in that month, okay, in rent. So the remaining £250 out of your £600 payment is going to go towards equity purchase. So now you have a genuine, realistic chance of actually buying your home and fully owning it. Now, people ask us, how do you make money? How can you afford to charge discounted rent? The reason we can do it is because when you are sticking to your target and purchasing equity off of us, what we say to you is, okay, as if you're treating it like a finance arrangement, you're the one living in the property, you are the one who has a genuine interest in the property. So minor maintenance is your responsibility, right? If the wallpaper's peeling or the carpets need replacing, you're the one living in it, so you should take care of minor maintenance. Major maintenance, as a partner, we must cover, right? But the way we cover that is we say, okay, we aren't set up to deal with the administration of hiring contractors and looking for, surveyors and all that kind of stuff. So you do it and we'll pay our share of it. So if you imagine the landlord charging you full market rent, right? He charges you full market rent, and now if the boiler breaks down or the roof blows off, he has to take some of that money you've paid him and pay it towards maintaining the property. So all we do is we take that slice that we would have paid in expenses anyway, and we pay it back to you in a discount, right? And then we say, right, we've paid our share, but you take care of it. You do the repairs and maintenance. We'll just cover our share. And that's how we can actually give this discounted rent, because we're still ultimately making the same rent that that landlord would make. The only bit we're taking off is the bit we would pay in expenses anyway. Does that make sense to everybody? So what this mechanism does is it makes our pricing very clever. It makes the pricing adapt to your circumstances. When you are just paying rent, treating it like a rental payment, you pay market rent. When you are treating it like a finance arrangement and actually buying our share from us, we discount the rent, and now it costs in line with what it would cost to buy a property elsewhere. And so it makes the pricing adapt to your situation. And I'll get onto our tech in just a minute, which enables you to do that in a very clever way. The other thing very unique to our property is this security of the property. It's the notion of an equity buffer that we have. So when you buy shares from us, you get tangible share certificates, right? Actual certificates proving your ownership of the equity. Now, let's say your monthly payment with us is £1,000. Your target is £1,000, which is your rent, plus the extra bit where you get your equity as well. Let's say in a month, your car broke down, you had to pay the mechanic, you can't pay the £1,000. As I mentioned with the bank, they'll give you 2 months payment holiday and charge you interest in the middle. What do? Well, first of all, you don't have to buy equity. So out of that £1,000 payment, you can choose to just pay the rent, which might be £600. So that gives you breathing room when you're cash strapped, right? Because you never have to buy equity if you don't want to. Now, Allah protect every single one of us. Let's say you lost your job and you can't afford to pay the rent. Now what happens? Now you can rely on your equity buffer because you have tangible equity in the property. So let's say you owe £600 of rent in that month. What you can do is give us back £600 of equity. And now you're not in default. You've paid us. But instead of paying us in cash, you've paid us in equity instead. And to put this into perspective, brothers and sisters, an average customer of ours, if they had 10% equity and they lost their job on day one, Allah protect every single one of us, lost their job on day one without ever having made a payment, that 10% equity buffer would last them on average 2 to 4 years. That's 2 to 4 years of security if you lose your job on day one, where you can, if you lose your job, Allah protect us, rather than the first thing you're having to think about being, oh God, how am I going to pay the mortgage, right? You don't have to worry about that. So you can worry about what's important. You can worry about getting back on your feet, finding another job, pulling your life back together, and then actually start making payments again. And this gives an unprecedented level of security in your home, not seen anywhere else. And that's the worst case if you lose your job on day one. If we've underwritten you properly, it's very unlikely from day one you won't be able to make your payments, because that's our job, to make sure that this is an affordable agreement, and we underwrite you on your ability to pay your target payment, because we're not trying to trap you in a rent cycle. So if you can just pay your rent but you can't afford your equity, we're going to say this is not affordable for you. We want you to be able to actually meet your goal of home ownership. So if we've underwritten you properly, it's very unlikely it's going to be on day one when that happens. Maybe 5 years, 10 years, 20 years down the line. Maybe you're getting old, you can't work, you've hurt your back, whatever it might be. But by that time, rather than 10% equity buffer, maybe you've got 20, 30, 40% equity buffer. And this is not a debt contract like a mortgage. So that might see you through the rest of your adult life until your next of kin, your son or daughter, can take over the agreement and carry on in your family home for you. Or you might just say, we're just going to rent for the rest of our lives because we're happy owning 40% and renting 60%. So this gives you an amazing level of flexibility and security in your home that you don't get elsewhere. And it's also very affordable because of those discount mechanisms that I've mentioned to you as well. So we've taken all the principles of Sharia, including fairness, not just sticking to the Sharia, the letter, but also sticking to the spirit of Sharia. And this is how our contract works. Customer journey, very, very quickly, because I know we're running late and I want to get through the slides. Basically, when your turn comes, and we've got a bit of a waiting list, but when your turn comes, we say to you, your turn's come. If you're not ready, no worries, you don't lose your place. We'll come back to you. If you are ready, you get a decision in principle from us, which tells you what your budget is. You go and look for a property. Once you found a property, so you choose the property. With some of the other shared ownership providers, you have to buy a property that they've pre-selected. Here, you can choose a property yourself. You come to us, you tell us what the property is. We do our due diligence, so we get it surveyed and valued, make sure there's no nasty surprises in there. Once we're both happy as partners, we proceed to purchase, and now we complete on the property, and now you start paying rent on our share, and the agreement proceeds, inshallah. I've gone through that in very high level. Quick comparison to other providers on the market. Ours is a co-ownership type arrangement, as I've mentioned. The banking, Islamic banks and conventional banks are mortgage structures. Shared ownership providers are also co-ownership. Our product is debt-free. Conventional banks and Islamic banks are debt-based. Shared ownership providers are also debt-free. FCA regulation, this is a really important one. Our product and shared ownership products are not regulated by the Financial Conduct Authority. Now, immediately you're saying, oh, God, you're not regulated. Oh, should I be worried? Okay, fair question. But you have to ask yourself, why is this not a regulated product? Okay? Why is a bank mortgage regulated? Because it's a lifelong debt that can very realistically ruin your life if it goes wrong or if it's not the right product for you. Do we all agree with that? Yeah, it can ruin your life if it's not the right product for you. Is your landlord regulated by the Financial Conduct Authority? Would you expect them to be? No. If you take out a rental agreement with a landlord and it's not the right product for you, are you trapped in debt for the rest of your life? Can you give your notice and walk away and find another property? That's why a landlord is not regulated, because it's not going to ruin your life. And that's actually a testament to our product and shared ownership products. Because there is no debt structure, it's not going to ruin your life in the way that a mortgage will, okay? So even if it's the wrong product for you, you can stop, change, or move on. Just like when you're renting from a landlord, which you cannot do when you take out a lifelong debt with a mortgage. And that's why shared ownership type structures do not fall within the remit of financial regulation. And we've been through a 2-year process with the Financial Conduct Authority, by the way, just to be clear. We went through that process and they concluded that we don't need to be regulated. And actually that's testament to the product. Affordability. So our product at the moment is cheaper than Islamic bank mortgages, as I understand it, and actually starting to become competitive even against conventional bank mortgages as interest rates go up. Now, this is incredible because, as I've mentioned, debt-based products, debt is cheap. Debt is always the cheapest product because the bank puts all the risk onto you, right? So for our equitable partnership-based product to be cheaper than a debt-based product is remarkable. Why is this happening? When we entered the market, interest rates were historically low. So compared to conventional mortgages, we were expensive. But now what's happening to interest rates? Going up, right? What's going to continue happening to interest rates? Probably going to keep going up. Now, as interest rates have been going up, Islamic bank mortgages have been going up in price because they peg to interest rates. Conventional bank mortgages have been going up in price because they peg to interest rates. Our products are not pegged to interest rates. So our costs have remained the same. So when we entered the market, we were relatively expensive because interest rates were at their lowest level literally ever. Now interest rates are starting to go up. Interest rates are still only 2.5%. I say only, right? Back in the 80s, mortgages used to cost 10%. Let's not forget, right? So right now, we're already becoming cheaper than Islamic bank mortgages, and we're starting to become very competitive against conventional mortgages as well. And shared ownership providers, on the other hand, are very, very expensive, as I've mentioned, and you need to be very wary of that because they charge you full market rent and they revalue the property and charge you full property appreciation. With our product, you fully own the property at the end of the term because you say to us what your target is. Let's say it's 30 years. We'll do the maths for you and say to achieve your target, this is what you need to pay every month. Now that's just maths. You can go higher than that. You can go lower than that. You can throw it out the window, entirely up to you. but we help you achieve your goal by giving you the tools to do it. Same with conventional and Islamic bank mortgages. You will be the full owner at the term because of the debt-based nature. With shared ownership providers, you will not, unless you actively remember to go and keep purchasing equity and can afford to do so. Our product is the only product that has this equity buffer mechanism I mentioned, which gives you unprecedented security. We have a huge amount of flexibility in our product through the app that we give you, where you can literally change your payments from month to month, and you've got all the information to make the best decision to do that. Our product is undoubtedly Sharia compliant, and I believe there is consensus amongst the scholars who have reviewed our product. And it's not just Sheikh Haytham Al-Haddad who has reviewed our product, but he's the one who's given it the certification. Conventional mortgages clearly are not Sharia compliant. Islamic bank mortgages have a Sharia approval, and you need to be aware of that. And shared ownership products also have Sharia approval. Are they Islamically authentic? Our product, I would argue, is very Islamically authentic because we have not just tried to take an existing product and rewrap it. We have built it from scratch on the principles of Sharia. Islamic bank mortgages clearly not. Conventional bank mortgages clearly not. Islamic bank mortgages, I would argue maybe not, but it's up to you to decide. And shared ownership mortgages, I've mentioned some of that very penal terminology in there. So again, you have to think for yourself, is it really Islamically authentic, even if it's Sharia compliant? I'm just going to get very quickly onto savings, inshallah. Okay. Now, before I mention how we do savings, what I want each of you to think about is the money you've got sitting in a bank account. What is that money doing? Okay. Let's make no mistake. The money we have in our bank accounts is fueling debt and riba. There are no two ways about this, because a bank has two key products. It's got current accounts or deposit accounts where you save all your money, and it's got mortgages and lending. And when you put £100 into your bank account, the bank takes £98 of your money and lends it to people with riba and debt. Okay? It's not the bank's money, it's your money. So when we put our money into a bank account, we are signing an agreement with the bank saying that I permit you to use my money to lend with interest. That is the agreement we sign when we put our money in a bank account. Now, up until now, we've had no alternative. But brothers and sisters, for us as Muslims, this is unacceptable. We cannot be comfortable with our money being used to fuel debt and riba. And we need an alternative. And we have got one alternative, and we pray, inshallah, that many alternatives spring up. And this is just starting the change. But we should make no mistake about it. The money in a bank account is fueling debt and riba. Even if you have an Islamic bank account, you have to be aware that your money is fueling Islamic bank mortgages. And if you're comfortable with Islamic bank mortgages, alhamdulillah, no problem at all. I'm not here to say they're right or wrong. But if you're not comfortable with Islamic bank mortgages, and there's definitely split opinion, then you can't be comfortable keeping your money in an Islamic bank account either, because your money is still fueling the very mortgage that you don't agree with. So how does our product work? And again, I'm talking about savings here, okay? I'm focusing on savings, the money that you're maybe saving up for a deposit or to buy a car or whatever it may be. The way our product works, I'm going to just describe it, forget the diagram. The way our product works is we have a similar layout to a bank. So a bank has deposit accounts and mortgages. We have investment savings accounts and halal home finance agreements. Now, with our investment savings account, you open up an account with us, you put your money in, just like your bank savings account. That money is used to help people buy their homes in a halal way. So now, rather than your money fueling debt and riba through conventional mortgages or Islamic bank mortgages, your money is helping people avoid debt and riba. We know the severity of dealing in riba. It's like taking up arms against Allah and His Rasul sallallahu alaihi wasallam. Imagine the reward of helping people to avoid riba. Just imagine, right? So this is what we're doing. So if you open an investment savings account with us, we use that money to help people avoid debt and riba by helping them buy a home free from riba. And unlike the bank, which gives you a tiny sliver of interest, which you can't even keep because it's haram, we give you a halal return. So the money that we make from our customers on the rent, you get your share of that money. So you get a halal return. It's completely halal. It's tax-free because it's in the form of dividends. And I haven't got time to go into what dividends are. But if you're not sure what dividends are, chances are you don't have lots of other dividend income, and it's going to be tax-free because there's a tax-free allowance on dividend income. So it's tax-free. Whereas, funnily enough, you may not know this, the interest you get on your bank account, as Muslims, not only do we have to give it away in zakat, but we also still have to pay tax to the tax man on it, right? You have to pay tax on the interest on your bank account. Whereas the returns on our savings account are tax-free, alhamdulillah. The money is used to help people avoid debt and riba. If you want to buy a home with us, we prioritize you on our waiting list, so you get your home quicker as well. And actually, one thing to bear in mind is the notion of zakat, which I think Sheikh Salman is going to talk about, but I'll very quickly touch upon it. When you put money in your bank account, is that money helping anybody in any positive way? Is it helping you in any way? Is it helping anybody else? No. That money is idle, right? Allah encourages us to utilize our wealth and circulate it through the economy and do something beneficial with that wealth. Because when we circulate our wealth through the economy, everybody benefits from it. It trickles down from the rich to the poor, and everybody benefits from the rich to the poor. Okay? When we leave it in a bank account, nobody benefits, including us. And so what Allah Ta'ala says to us is, if you cannot find something useful to do with your wealth, then at least let the poor benefit from it. So you pay 2.5% of your idle wealth in zakat every year, right? Now, zakat is incredibly important. We must pay our zakat, and there's a clear benefit to paying zakat. But the reason we pay zakat is almost as a penance for not doing something useful with our wealth, right? So when you do something useful with your wealth, when you buy a property to live in, you're using that property day in, day out. Do you pay zakat on the value of your property? No. When you buy a property and you rent that property out, you're providing someone a home. Do you pay zakat on the property that you're renting out? No, you don't pay zakat on it. If you get rental income and you have that rental income in your bank account when your zakat date comes, then you pay zakat on that rent. But you don't pay zakat on the value of the property that you have purchased. This is fundamentally important. When you put money in a bank account, you are not putting money into property, you are lending money to the bank. That's why they pay you interest. It's interest on the loan that you have given them. That is haram. And you have to pay zakat on that every single year, the money that you leave in your bank account, okay? If you put the money into an investment savings account with us, that money goes into properties for people. It's not a loan. You're actually buying properties, buying homes for people. And so you don't pay zakat on that money anymore, okay? Because you've actually activated your wealth, you're doing something useful with it, right? And so what that means is, let's say you're saving up for a deposit to buy a home. If you're paying zakat on that deposit, after 4 years, you've paid away 10% of your deposit, okay? Now, that 10% has enormous barakah because you've paid it in zakat, it's gone to poor people. But if you're using that same money to help people buy a home free from debt, free from riba, you're no longer having to pay zakat on it. You're getting the reward, sadaqah jariyah reward, of helping people avoid debt and riba. And you're also keeping that 2.5%, which helps you save up, right? It helps you save up to buy a home yourself, right? So the reason we've structured our investment savings account is because there are too many Muslims leaving wealth idle in bank accounts, millions, hundreds of millions of pounds sitting idle just amongst the Muslims, right? And we need a better solution than that. And so that's why we created our investment savings account. You get a halal return on it, it's tax-free, you don't have to pay zakat on it, you're helping other people avoid debt and riba rather than your money fueling debt and riba. And if you want to buy a home with us, you get prioritized on our waiting list. So what we've done is we've created a virtuous cycle. It's built on the committee principle, which many of us are familiar with. It's actually a very prophetic tradition. It's a virtuous cycle where everybody is helping everybody else and everybody is benefiting too, inshallah. And this is one alternative we have created compared to leaving your savings idle in a bank account. And I pray that many other halal alternatives come up. This is just the first, inshallah, which we can all be comfortable with as Muslims, because we should not accept leaving our money in a bank account. I just want to very quickly, last slide, talk about our tech. Very quickly, I keep going on about our tech. What you can do, imagine you've got a Barclays mortgage, astaghfirullah. You have a 30-year term, you're paying £1,000 per month, and after 6 months you decide, actually, I can afford to pay £1,200 per month. I want to shorten my term to 28 years. They don't let you do it. If you want to do that, you have to go and reapply, do a brand new application with them. You don't even have the information to know if you're making a good decision or to know what the impact on your financials is going to be until you've gone through the big application process, right? With us, because that term is just a target, it's not fixed, you can be flexible. So with us, you can go into your app, you can do what we call what if analysis. From month to month, you can say, right, this month I'm just going to pay rent. This month I'm going to pay my target. This month I'm going to make a £10,000 overpayment, no early repayment fees, nothing like that. And you can do what we call what if analysis. You can say, right, I've got £10,000 saved up. What if I pay it all towards my equity at once? What if I spread it over the next 6 months? What does it do to my payment projections? What does it do to my term? Which one helps me achieve my targets better? That one, okay, click, and it's done. You don't have to do a brand new application. You don't even have to pick the phone up to us. You can do it at 3 o'clock in the morning from your smartphone sitting in your bathtub. So we give power and control to you in a way that has never been done before. Jazakumullah khaira for listening. Assalamu alaikum.